J.S Gujral, the MD at SYRMA SGS Technology, is joining us on the show. The revenue has seen an uptick of 37.5%. EBITDA is also up very healthy. Margins have also expanded. So all of that looks good. Mr. Gujral, thank you for your time today. Help us understand what were the key factors that worked well for the company this quarter, because margins have seen a good improvement like we were talking about. And what role did backward integration play in this? Because all over you've had an all-round amazing quarter.
See, we had referred to in our earlier calls, we re-strategized our business model somewhere in Q2 last year. And since then, consistently for every quarter, we have been focusing more on our high margin products, including exports. And that has resulted in the accretion in the EBITDA margins.
Okay, and the other big update coming in from other than numbers is the acquisition news coming in. Mr. Gujral, with 60% stake acquisition in Elcom Integrated Systems, this marks your entry into defense and maritime electronics. What are the big plans here? What sort of investment and milestones does this move involve?
This is almost a 5-decade-old company established in 1978. And works very closely with the Indian Armed Forces, the paramilitary forces, and the private sector for providing a range of system solutions, including communication, jammers, periscope, and other activities. We had all the time indicated that we would be acquiring a company in the defense sector because we wanted to enter this high growth area and didn't want to reinvent the wheel that starts from the beginning. So I think this is a very, very significant step in our journey in diversifying our portfolio. And now almost all the portfolios, except for maybe aerospace, all the portfolios we have in our bucket. And we believe that with this acquisition, with the very good reputation of Elcom and the existing management of Elcom continuing with us for the next 3-4 years, I think it's a very good foray, and we expect this vertical to be very margin accretive to SYRMA SGS. And in addition to that, we also announced a joint venture with Master of Italy for the railways. That happened about 2.5 months back. And along with Premier, we acquired K Solar, which is a company which is into the solar inverters.
Right, okay. So lots of announcements coming in, Mr. Gujral, and that sounds optimistic. But could you also share the segment-wise growth trends and which verticals have contributed the most to your top line this time?
As I had sort of shared with the investors and the analysts and the press last year, we had re-strategized our business model in which the high volume, low margin consumer business was planned to be brought down to around 30%. And we are happy to share that this year it is down to about that percentage in the first half. We'll continue to grow the high margin areas, which are automotive, industrial. Now it will be defense, healthcare, and exports. Consumer will continue, the high volume, low margin consumer will continue to be sub 30% of our revenue. That's the plan and that's the target, and that's what we are working on.
Okay, and Mr. Gujral, let's talk about your exports now. They form 23% of the overall revenue, which is an uptick of 40% on a year-on-year basis. If you could help us understand what's driving this strong export momentum and which segments are performing well when it comes to the exports of your products.
The exports account for about 23 to 24% of our revenue. And for the first half year of FY26, they have shown a robust growth of 34% over H1 of 25. This despite the uncertainty because of the tariffs. Our exports are primarily focused to EU and America. America accounts for about 5% of our total exports this year. Going forward in the years to come, America would be a pivot for the growth of exports. And I personally believe the tariff issue should be resolved in the coming coming months or a quarter or so. All indications are based on that. So exports would continue to be a focus area for growth. And this year we expect, despite the tariffs, we should cross the 1,000 crore mark in exports. Next year, if we continue to grow at 20-25% exports, it should be about $140-150 million. So exports would continue to play a very key role in our growth strategy. And in exports, it will be primarily healthcare, industrial. We have started exporting auto electronics also, which accounts for about 90-100 crores in a year.
Okay, so that sounds very strong in terms of your exports pipeline. But if you could help us understand what your margin guidance is for the overall financial year, and can we see you exceeding your earlier guidance? Also, if you could share any outlook on your net profit as well as the overall top line.
See, on the margin front, we had last quarter guided that we'll do about 8.5 to 9%. And based on the performance for the first year, it gives us confidence that we'll exceed that guidance. Now, whether we exceed by 0.5%, 0.25%, I think let's wait and watch. But I think we are very confident of exceeding the guidance of 8.5-9% given during the last earnings call. And going forward, as we had already said, that our endeavor is to be a double-digit EBITDA company. And with the high margin acquisitions in defense, the backward integration, the railways, I'm very confident in the coming quarters or coming year, we should be able to deliver a 10% EBITDA margin. Now, as far as the growth is concerned, we must appreciate that last quarter, Q1, we had a negative growth of 19% because the consumer business we had scaled down substantially. This quarter, the growth has rebounded to 37%. And we expect the growth in the coming year, in this year, to be around 30% with a very solid EBITDA. Next year, we are very confident because we have added 8 new customers, which have a potential of giving us 100 million revenue next year. In addition to that, we have entered into long-term framework contracts with a couple of our existing customers. They are big multinational companies, which have a potential of giving a $200 million revenue over a 2-year period, 3-year period. So I think we are on track to give a solid growth this year and an incremental growth next year.
Okay, Mr. Gujral, that sounds very optimistic. On that note, we'll let you go. Thank you so much. And once again, congratulations on the stellar quarter.